Bitcoin halving, which is an event that happens every 4 years. I would imagine the market buying a little bit into that, and then possibly seeing what we know from traditional markets: buy the rumor, sell the fact. But I would agree with the earlier comments. That's pretty decent support, not so far below.
100K or 200K by the end of this year?
I'm not a Bitcoin maximalist, but I know a few who are. The halving, of course, by definition, becomes less and less important because the actual supply cut gets smaller every time. Just to explain that every 4 years, the number of Bitcoins you get for winning a block gets halved. So the impact on supply demand, by definition, gets a little bit lower. Hence, you would think that the halvings were increasingly less important. But it has a psychological impact on the market. And if I had a take on it, I would say people probably buying into it ahead of the event and then possibly some profit taking afterwards. The long-term game, I think, is more dependent again on supply demand. We need to see if these ETFs really drive a significant new demand. That would be important because there isn't that much free supply. And again, that has been perhaps drawn a little bit in doubt by the last week's action, where for the first time actually approximately 1 billion left the ETFs, where it's been all one-way traffic the prior 7 weeks. So, I'm not a maximalist, but I do think we'll retest the highs. I do think there'll probably be a little bit of buying into the halving, and from there on, it's supply demand. And if significant institutional interest and private wealth interest comes because of the easier access, it's more supply demand than anything else. And if you have all of a sudden 100 billion want to buy a limited supply, it'll go higher.
Let's talk AI.